Hey everyone, it's Evan here from the Trade Risk on Friday, May 25th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So I hope you're doing well out there. I hope you had a good week of trading. It was sort of a boring week of trading, very choppy action. We saw volume dry up, and that does make sense. It is Memorial Day weekend, and that tends to be kind of the kickoff of that summertime lighter volume trading in the stock market. And because it is Memorial Day, so do remember markets are closed on Monday, and hopefully we can all take some time to think about, appreciate all those who have actively serving and have served out there for this country. So with that, let's jump into to the analysis here. We're going to start it off with the S&P 500, looking at a weekly time frame like we typically do here to kick off the videos. Each bar on this chart represents 1 week worth of trading. This is the cash market, and we can see here as far as performance goes this week, we did finish slightly higher, up a little less than 1/4% here on the week, about 6 handles in the S&P 500, and it was nearly an inside week. It was a very tight, again, a very kind of lackluster, choppy week. Ranges were pretty tight. Last week's range was tight, and we just about had an inside week. We failed exactly at last week's highs, and we just kind of mulled around in the same range. So from this weekly time frame perspective here, technically speaking, structurally speaking, not much has changed. We now have a market that is fairly pent up here, and that is the big kind of takeaway from today's video recap is I think we are poised now to get some range expansion, to get some movement into next week. And certainly if we see, continued tightness next week, then we are certainly ready to, to ignite in coming in June. So the way I look at this here, 2,700 on the downside, that was the past 2 week lows. 2740 on the upside. Those are the goalposts I'm going to be paying attention to. Until then, we are still trading above some bullishly aligned weekly moving averages here, and we are holding above this downtrend line that extends from the prior highs here, or the all-time highs back in January. So that is the landscape overall here on the weekly time frame. Let's go to the daily chart, and we'll go to the SPY ETF here, and you can see in this rectangle, in this box that I have drawn here, this is the tight range. This is the overlapping range we've been in over the past 2 weeks. 271 on the downside, 274 on the upside. And again, if we zoom out just a little bit here, you can see this consolidation is taking place at a fairly significant spot. So first things first, we are again trading right above this downtrend line that extends from the all-time highs. We broke out from that downtrend line back on the 10th of May as we cleared back above 270 or so, and we've since gone sideways. And this 271 level also is pretty important in recent trading history here over the past several months. We had a pivot here in April. We saw some support and a breakdown back here in March. Again, some support in February. So this level has some history behind it. It also has some moving averages in this general zone. So as we've sort of been talking about, if you've been following along in the past couple of videos, I do consider this to be a fairly important, crucial support level to hold on to. And in fact, it's growing in importance given the fact that we are just continuing to extend higher, longer sideways here in this range, giving even more sort of importance to this 271 that is held on many occasions now over recent trading. If we start to break down through here, lose the moving averages, lose 271, and fall back into this trend line and into this old chop, then the sellers have, sort of another lower high to sort of trade against and put in their corner, put in their back pocket if we do see that breakdown. It is still yet to be seen. I think still given where we are on the longer term, intermediate term time frames, looking at all the moving averages, looking at breadth, looking at everything we can kind of compile here on a technical basis, I think we still need to give credit or the benefit of the doubt to the bulls here, because we are still holding above and up in most of the, some short-term trends. I mean, if you just look at this latest rally that started back here at the very beginning of May, so we started all the way down here back at 259 and we rallied all the way up to 274. I mean, if you wanted to actually put some type of retracements, put some fibs on here. I mean, notice 23%, right? That is all we have managed. 25% maybe, I guess, with the 15th low, but about 25% is all we've managed to give back in terms of a retracement from this latest leg higher. So we could look at that and say, you know, this market is really consolidating through time here. And if we get that trigger higher above 274, then we can look back at this and say, this is a really solid looking, fairly textbook continuation pattern. But we will only truly know that in hindsight, right? We don't know for sure that we are going to get a breakout to the upside. We can say that we think it is more likely scenario at this point, given the structure of markets at this price area, but we don't know for sure. So that is really kind of the picture I'm looking at. 271 on the downside, 274 on the upside, and we're going to see next week if we can get that expansion down or out of this recent trading chop, this range. And notice here today on Friday, we got an inside day. So we're all kind of, the scene is set, the table is ready to really ignite out of here early next week, and let's see if we in fact do get that. So that is the S&P 500. I think that pretty much covers everything I wanted to say here on the S&P 500. Let's go to the IWM, and you can see the IWM here did manage to, let's see, did it close green on the, all right, so it closed, it's just slightly red on the week, but all in all, you know, really can't fault it after 3 nice green weeks in a row. When we look back at a daily chart here, I think this is really kind of the bullish picture that we did paint here back in our midweek video. We said, look, a stair step kind of retest of 160 would be completely healthy as long as we don't come slamming down into it with some real kind of ugly price action, and we didn't get the ugly price action. We got just kind of this slow grind. Kind of yesterday on Thursday's session, we had this tail down here and almost retested this 160 level. I'm not sure if this is enough. I don't know if this is consolidated and worked off enough of this sort of overbought condition, this run that it had throughout May, but it's a good start. And again, I think it's fairly healthy. We are still above an 8-period EMA. We've kind of just simmered down a little bit, volumes dried up, and we really just want to see how this acts into next week. Again, I think to keep this market as bullish as possible, the maximum amount of upside momentum, we'd want to see this on a closing basis hold above about 160 or so. We could get a deeper pullback, and this market could, you know, certainly pick itself up from that, but the ideal scenario is kind of like the SPY did, sideways through time, hold above 160, see that volume kind of dry up, and I think that would bode pretty well for the market overall. Finally is the Nasdaq 100, and this was the shining star this week. This was actually up 1.35%. Didn't quite take out last week's highs, but still on a relative performance basis, this was the outperformer here, and I've been on the wrong board, so I apologize for that. So now here's some lines drawn in. This 171, this is going to be resistance up here above it. We tagged it last Monday, or was this 2 Mondays ago on the 14th, and it did coincidentally fill the gap here back from March 19th. So we did get that gap fill. We ran into resistance, we reversed, and we pulled off, went sideways, and now here we are trying to make a meager attempt at it back here on Friday. Again, volume was light, and we did pull off of the 170 level again. So for the market, for the bulls, for that bull case, again, 170 here, 171 in the Nasdaq 100. This is the level we want to see taken out to the upside. Right now, we are simply at the top end of this range, and what sellers are going to want to see, what bears are going to want to see, is that the top end of this range fails, and we fall back and reverse into this sideways channel here that we've been in since January, February of this year. So this is the battleground we're going to want to pay attention to next week as far as levels go. 171 on the upside, and then I'd say the lows here from Wednesday, this nice bullish engulfing bar that got printed, 167, that would be the upper level support that we want to see hold in there. So I think all in all, we're waiting for this market to really definitively make its move. The IWM has really kind of fueled this market and got us up to this point. It appears to be consolidating. We saw energy start to break down this week, which has been a leader. We saw financials give back some gains this week, which has been a leader. So we really want to see rotation, and it seems like the Qs here are starting to pick up the slack. So again, we saw energy and financials kind of see money leave, and perhaps it's technology and semiconductors, which were the old kind of guard that had helped really carry this market higher for hell most of this bull run, in fact, start to get a little more of wind in their sails. So that is the landscape overall. Hopefully those levels help. Hopefully that makes sense. Let us get into, just talk about, well, actually, so we'll talk to TLT first, which had a very impressive move this week. 2.06%, so a little over 2%. We took out last week's highs and the prior, let's see, 3-4 week highs here. So we're back to levels last seen, I guess only in April, but still a very impressive V-shaped rally off of this 117 level. It was kind of a little stutter step. We did talk about the significance of this reversal here back on Friday, and we talked, or this was Friday the 18th, we talked about, mean reverting traders, want to pay attention to this. Still had plenty of technical resistance and obstacles in the bull's face for TLT, but it was at a critical spot. We did see this violent kind of recapture of 117. Then it just kind of stalled out for 2 days, and then we saw this 3-day ignite here with some overnight gapping sessions here in the long bond. So up 73 basis points, 80 basis points, and then 62 basis points. So almost 3 back-to-back 0.75% days, and finished the week near the highs here. So that is impressive. And really, when we look at the we even look at like the 10-year yield, which I know a lot of people have been eyeing. We saw a nice kind of a pullback there as well, coming right back to this 29.25 level in the 10-year yield, which I believe is back below 3%. So, we did see bonds rally this week. We saw yields pull back, and again, equity markets mostly flat, but some interesting development there as far as the macro picture goes, and what type of assets were sort of flowing this week. So TLT off again, nice bullish start here. It's still again, when we look at a weekly chart here, this is still in a tough path. We still have declining 8 and 20 period weekly moving averages here. We got supply above here around 121 or so. So it's a tough case for the bulls. But if we are in fact range bound here, then perhaps this move gets completed up closer to 121 or even 122, where we were back in March and April, and that's maybe where the target is, back to the top end of this range here. We'll have to see. Not playing it myself, but certainly nice little squeeze there this week. Next up, we'll go to oil, which got hammered this week. So finally giving back some of this rally, pulling back 5% on the week, a little increase in volume there. And really, that only takes us to about 3 weeks ago, the lows here from over the past, really April, early May of trading. So 5%, it is quite heavy in just a short amount of time, but given how strong this market has been, it really didn't take us back that many days, calendar days of trading. So if we were to zoom out here, we could draw sort of the accelerated trend that we started to rally from. Even just recently. You could look at all these shorter term trends that oil has been in. They've all kind of broken down, and perhaps now this slope here that extends from February, maybe this is where maybe we have a little bit more to go, which would sort of coincide with the lows right here. So perhaps oil gets another day or two of selling pressure into next week, and then maybe this is where we start to see bulls step in again around 13, low 13 to mid 13 in the USO ETF. If you're real tactical, that might be a decent spot to start to look for a reversal or some stabilization in price. For now, we had this ugly gap down here, 4%, high volume. It's very tough. It's a total knife catch right now. So I don't necessarily advise jumping in right here, but if you're tactical and you can manage risk and that's your strategy, then by all means, see what you can do there in USO. But trend lines breaking on heavy volume. Let's see how the dust settles here. in oil. Natural gas, not so much. This is kind of the opposite. It's had this nice week, put together a 3.5% week here in natural gas, the third back-to-back green week here. So very impressive by the bulls. And again, a little that volume starting to pick up, starting to get a little more trendiness here. So good developments happening in natural gas. Hopefully this is going to be in play back to the long side over the coming summer trading months. So natural gas bulls, lot to like there. Next, let's go to metals. GLD, let's see, on the week here, did finish higher, 65 basis points, did pull back a bit here on into the end of the week on Friday, but we did see this nice push higher on Thursday, gave a little bit back on Friday, and we did get ourselves off of these lows around 122 in GLD, so that longer term trend line perhaps kind of, or this channel coming into play here. But we are rallying into some declining moving averages. So my stance with gold, kind of the same that I've had now. I want to see it back above 124. Let's prove that we can reclaim this support that we recently broke down from. And if we can do that, then perhaps we get some type of squeeze back up into this old range. And that would give us some more confidence that the gold bulls are in fact, jumping back on board here. So that is GLD. Silver back, still in this channel. Really not much interesting going on, just still kind of waiting and biding its time here for an eventual breakout. Right now, middle of the range. Let's just give it some time. So that I think covers all the major markets. Let's jump into some of the sectors now. So if we look at this week's sector performance, the top of the board now is utilities, and this is a nice save by utilities, because this is where, let's go to the weekly time frame. We talked about how ugly this looked last week on a breakdown of what is what really looked like a bear flag sort of formation. Since February, it's been kind of grinding higher, and we just got the breakdown of the recent lows there, or that trend line, I should say, last week, and now we swiftly recovered and reclaimed sort of the slope here that started in February. So utilities, I like it. Again, this is certainly with bonds rallying, rates pulling back, this makes sense because it is very correlated to that trade and that rotation. But it is a nice save here, and who knows? This could really start to ignite and get all the way back up to $52 or so, which I know it's a boring sector, but you could get another couple of points out of XLU if you're patient there. So that was our top performing sector. Number two on the charts here is XLK, so technology. If we go to the weekly time frame, very similar to the Qs here. So we did recover about 1.3%, getting back towards the top end of last week's range. We're still below the highs here made back in March of this year, but we do have some nice bullish alignment on the weekly chart. XLK, we do have this nice kind of flat top here, so it looks very similar to the Qs. And if this continues to perform and break out, that'll be a good sector to have our old guard leading us again with the market higher. And then finally, discretionary. Discretionary continues to very methodically sort of trend higher here. Not a lot of enthusiasm or heavy trending action, just a very kind of grind higher right above the 8 period. We're back above this downtrend line that extends from the January highs. So discretionary, it's working. It's a little slower moving, but it's getting the job done right now. Now on the downside, we saw energy stocks finally getting crushed here, or crushed is a relative word because they've covered a lot of ground. So, we are finally pulling back, I should say, would be the more appropriate term. And the pullback really started here on Tuesday. We saw this outside reversal day, and the volume started to pick up here. We poked our heads up to new highs. We reversed. We took out the prior day's lows, and we fell below this swing point here. That's sort of one of my favorite type of reversal setups. And in fact, this was a reversal that we played. Subscribers and I played via the 3x inverse ETF on the energy space, ERY, I believe. Let me double check. Yes. So we did jump into some ERY there on Tuesday. Proved to be a nice trade, as we did see this pullback kind of get underway here. We did fill this gap back in Wednesday. We no longer have this position on, by the way. But it did fill this gap. It did lose the 20 period, so it lost this trend line here. We did see some heavy volume come in on Friday. So perhaps, you know, again, with this tail here, we're going to start to stabilize out, maybe all the way back down to 72.50 or so. The range here that we spent most of April trading is the target. Maybe we come all the way back down here and catch our footing. But for now, 4.5% to the downside this week. It did cover a tremendous amount of ground in 2 months. So, you know, again, if we want to throw fibs on here from the entire move, depending on what your time frame is, if you go from April all the way up to the highs made last week, this is a 38% retracement. 50% would be around $72, 72 and change, which is the lower end of that range we just talked about. So that's XLE, worst performing sector this week. Materials, number 2, down 1.42% this week. We are still clinging on to a 20 period EMA there. We saw volume just very light this week though on this pullback, but just, you know, again, kind of you know, had a nice move from 56 all the way up to north of 60. We're starting to pull back now. Let's see if the 20 period can hold it. And then financials, a little more of a nasty kind of rug pull here, particularly on Wednesday, because Wednesday was really sort of the rug pull day, and I know that's when rates started to really kind of head the other direction, but if I can get these lines drawn out here, this was an encouraging day. Of course, we didn't close strong, but Tuesday, I know, got some excitement here that we're potentially going to get a nice resolve and maybe even the start of a second leg higher here in financials. So I think we probably squeezed some shorts and got some eager longs in here. And then we really just started to give things back Wednesday, Thursday, and now we're back below this $28 level. So this $28, this was resistance for all of April. It's got some prior significance of chop back here in late December. We really want to see financials back above 28. If the longer they stay down here, the more susceptible they are at kind of falling back into this old range. So we'll want to see some improvement there. It's on a sort of do not touch list until we can reclaim this level up here for me. So that's it. That's what I got for this week's video. Thanks so much as always for watching. And if you like the videos, do subscribe on YouTube. Keep you up to date with all the latest videos that we're putting out. Enjoy the long weekend, and I will talk to you on Tuesday. Thanks so much.